Well, hello and welcome. What I want to talk to you about in this short video is how does the US presidential election in 2024, in fact, US presidential elections in general, how do they affect your investments? How do they affect your wealth? And we want to look at this through two lenses. A longer term lens where we're looking at 12 months and longer. And then we also want to look at this through a shorter term lens, right? Obviously less than 12 months. How does the US presidential election affect your investments and the way that you invest, the way that you profit and protect when we are electing a new leader of the free world? So what is the best way to prepare for whoever wins? Now, if you're wondering what I look like, there I am there. My name's Allison, and I'm going to be giving you general financial advice, right? I'm just going to be giving you my opinion on what I see and the actual strategies and techniques that I use myself personally. Now, let's look at the facts, right? When you talk about politics and certainly the US presidential election, it can be very divisive, and this is something where a lot of emotion can come in. We don't want to look at this through an emotional lens at all. In fact, we're not going to be talking about politics at all, right? So, if we look at, say, the two terms that President Clinton was in office, the two terms that Obama was in office, the one term that Donald Trump was in office, and then also Joe Biden. So if we look at the first term that Bill Clinton was actually in office, the first 3 years and 8 months, the market, looking at the S&P 500, the best gauge of the US stock market, the stock market was up 55%. Right? As you can see, from when he was elected, 3 years and 8 months into his presidency, the market was up 55%. Now, he wasn't just a one-term president, he was a two-term president. So if we look at his second term, first 3 years and 8 months, the actual stock market was up 42%. Now, if we now look at Obama, in his first term, again, his first 3 years and 8 months, the stock market was up 61%. If we now look at his second term, Obama's second term in office, for the first 3 years and 8 months, the market was up 51%. If we now look at Donald Trump in his first 3 years and 8 months, the stock market was up 58%. And then finally, if we have a look at Joe Biden, now there's been a lot of talk about Joe Biden being the worst president in history and being terrible for the economy and a whole range of things. But what actually happened in his first 3 years and 8 months in office? Well, guess what? The stock market was up 53%. What we're looking at here is a whole range of different presidencies over a very long period of time, and the market was up approximately 50% 3 years and 8 months from when all of them actually took office. So what I'm trying to say to you is, longer term, it doesn't really matter who the US president is. It doesn't really have that much of an impact. So that's something that is very surprising for a lot of people, but these are the facts. This is the data, right? We'll look at the data, not the emotion. So where should I invest long term, Sean, right? We have a new president that will be coming into effect, 5th of November. Will it be Donald Trump? Will it be Kamala Harris? Who is going to be the new president? And we now know through looking at the data that it doesn't really matter who is actually going to be the president in the longer term for your investments. However, what we need to do is see where is the best place for us to be investing right now. What is more important longer term than the US presidential election is the debt cycle. And this is something that's very, very important. This is more important for your investments, for your retirement money, than the US presidential election. That is for sure. The debt must expand to pay off the old debt, right? We can see here that the amount of debt, global debt, compared to global GDP, looking at it from a global perspective, has gone up dramatically, right? So the debt is expanding. We operate in a debt-based monetary system. You have to then pay off the old debt and start the cycle again. So what we're seeing here is that when debt does mature and you need new debt to come in to pay off the old debt, we can see here, if we look down the bottom, that around, and here, 37%, 35%. 72% of all debt matures within the next 5 years. Remember that. That's a very, very important point. So what does that have to do with our investment, Sean? Well, it all ties in with the business cycle as well, right? Which is a 4-year cycle. Right now, we are at a low here in the 4-year cycle. I expect we will see the business cycle move higher according to history. Now, history doesn't always repeat, but it certainly does rhyme. So what you really want to be looking for when we're talking about debt, and 72% of all debt is going to mature within the next 5 years, we know that liquidity, global liquidity and US liquidity is going to expand. When money's being pumped into the system, there are certain assets that do extremely well. The market in general does pretty well, right, when that happens. But there are specific assets and specific areas that if you invest in, particularly over the next 4 years, you can make incredible amounts of money. So we can see here, again, US liquidity about to explode. Global liquidity is about to explode, right? And this is something that you have to be aware of. This is much more important than who is going to be the US president. So the two assets that I believe that you want to be focused in on, Bitcoin and technology stocks, and technology stocks that are very much focused on artificial intelligence. Artificial intelligence has just begun, right? Certainly, we're not at the end of this cycle, not even by a long shot. We're just starting to crawl. But this is going to be explosive. People don't understand what is going to happen over the next several years, even within the next 12 months. If you're positioned correctly, the amount of money that you can make here is phenomenal. Now, Bitcoin is lagging global liquidity right now, okay? So we can see the black line, which is global liquidity, and we can see Bitcoin, which is this sort of faded out line here. That is Bitcoin, right? It is lacking, or falling, should I say, lagging behind global liquidity. What does that mean? That means that it's likely to catch up. It is likely to have an explosive move higher, longer term. The two best performing assets over the last decade are Nvidia and Bitcoin. And why is this something that you should be interested in? Because if you know how to take advantage of this huge expansion in global liquidity and making sure that you're investing not huge sums of money, but reasonable sums of money into these investments that benefit from a massive expansion of global liquidity, like I say, you can make phenomenal amounts of money. Now, right now, the US presidential election is fairly tight, right? It's neck and neck. Donald Trump is to win. He has announced that he will have a Bitcoin strategic reserve, right? This is going to be a very big deal. These are some of the promises that Donald J. Trump has put forward. He will appoint a Bitcoin advisory council. He will ban the creation of central bank digital currencies, and he's going to support the establishment of a Bitcoin strategic reserve. This is very, very important and could see the price of Bitcoin move much, much higher. We recently had BlackRock, one of the largest institutions in the world, coming out saying that the Bitcoin market cap will at some point match the property market cap. That's a pretty big deal, around $50 trillion. If that was to happen, one Bitcoin would be worth $325,000 US. But back to Nvidia and Bitcoin, the best performing assets of the last decade, we can see that Nvidia has actually just outperformed Bitcoin over the last 10 years. But what I'm going to make you aware of is another asset or another stock linked in with Bitcoin that has actually outperformed them both, and that is MicroStrategy. Now, MicroStrategy is a company that has done extremely well. Recently had a stock split, as did Nvidia, but right now we are seeing MicroStrategy really moving up strongly. We have made phenomenal, life-changing amounts of money with this particular stock. Do I believe going forward, longer term perspective, certainly if Donald Trump is elected, even If he isn't elected, we will still see Bitcoin move up for a whole range of reasons that I don't have time to get into right now. But right now, what I'm seeing is an incredible opportunity in MicroStrategy. We have already had incredible amounts of money being made here, and I'll show you some proof of that in a moment. But if you just look at the data, look at the facts, the stock performance of MicroStrategy compared to Nvidia, Tesla, Google, Microsoft, Apple, Meta, Netflix, and Amazon, compared to any of those stocks, it has outperformed them all in the last 4 years. And by a long way. Look at the return here. Just incredible. They're borrowing fiat, right? Currency that is devaluing at around 14% a year and buying Bitcoin, which is a fixed limited asset, right? Which is now being proven to be a store of value. And if you look at the numbers, not the emotion, look at the numbers, MicroStrategy is really doing this in a great way. Now, look at the move here in MicroStrategy. This is before their stock split, right? It went from around $571 to almost $2,000. Pretty incredible move. What did we do? We set up something called a risk reversal trade. Now, this is something that you could potentially consider. Now, what we did is we set this up on the 19th of the 12th, 2023, when the price was $571.90. We set this up. A risk reversal is where you buy a call option and sell a put option at the same time. It's a synthetic stock position. This position cost $1,330, and 3 months after we had set this risk reversal trade up on MicroStrategy, we turned that $1,330 into over $135,000. Pretty amazing, right? So incredible amounts of money can be made here. So where should I invest long-term, Sean? What should I do? What should I be doing right now with what you're showing us? Well, if you have a look at some of our members here, right? MicroStrategy, $5,000 in profits, almost $5,000 in profits. This is just recently, right? And, these are people that are just putting in very small amounts of money. Some more of our members here. 2 trades, they're up $10,300 in profit, as you can see here. A trade on Nvidia and MicroStrategy. Another one here on MicroStrategy. They're up around $13,000 in 10 weeks. Pretty good stuff. Another one of our members here with a risk reversal, okay, on MicroStrategy, up over $100,000. So this is certainly something that you can make very good money with. It's just understanding some very basic option strategies, right? Something that anyone can do with a standard brokerage account where you can trade US exchange traded options. So with MicroStrategy, what could you do? Well, you could buy a leap option, right? An option that expires 12 months or more on MicroStrategy. You could set up a synthetic stock position or a risk reversal using leaps. You could buy the stock and sell call options against it, right? When it's overbought and against resistance. You could set up a covered call. So you could own the stock. When the stock has a very big move higher, maybe as a result of Bitcoin moving higher, you could then sell call options out of the money, bring in more income, reduce your cost basis, and continue to make money as you hold the stock long term, right? Some very powerful strategies there that, I could go into detail maybe on another video if that's something you guys would be interested in. And then you also spoke about tech stocks with AI. Now, why don't I give you something here a little bit more concrete? Why don't I actually go through and see if I could find some tech stocks now? Let's do it together, and then let's analyze one of these companies together. And let me go to a website called Finviz. Right? So if you come to Finviz, Finviz, probably the best free stock screener on the internet. What we now want to do is click on screener. What are we looking for, Sean? We're looking for technology companies that will be positively impacted by artificial intelligence. Okay, that's what we're doing. So we've clicked on screener. Now we're going to click on all. And now what we're going to do is we're going to set up a very specific screener to actually look for tech stocks that are going to benefit from artificial intelligence. So firstly, right up the top in the middle there, sector. We click on that and we go down to technology. The next one we want to look at is the industry, like is a subcategory. So think of the sector as a category and then the industry as a subcategory, okay? Now we're going to go down to semiconductors, GPUs, right? These are what semiconductors companies produce, and they are absolutely critical for artificial intelligence to grow and artificial intelligence in general. So as artificial intelligence increases, the semiconductors, the companies will make phenomenal profits as well. Now, we don't want to just choose any semiconductor company. So what we want to do is make sure we've got the best of the best here. So we go to return on equity, okay? Now this return on equity, we're looking for something over 20%. Now this return on equity provides us with an insight into the business's profitability for the owners and the investors. So if you're going to invest your hard-earned money into a company, you want to make sure that you're getting a good return on your hard-earned money, right? And a return on equity over 20% is fantastic. A well-managed company that's producing a great return for its owners. So now what we want to do is have a look at some of these companies, right? So you can simply hover over each one of these ticker symbols here, and you can have a look and see what the various companies are, right? So if we look at these, NVIDIA, right, we've just spoken about NVIDIA. Certainly that's something that you could entertain. We'll have a look at that in a moment. And there's a whole range of different companies here. Only 12 actually, right? Wouldn't take long to go through it. Now, if we looked at something like RMBS, okay, so let's go ahead and click on that. And let's have a look. Now, has it broken above a significant resistance level and really making a significant move to the upside? Not yet. Has it broken above the 50-day moving average? Yeah. Not particularly strong price action yet, okay? So probably not one that I would jump into right now. Another way that you could look at this as well, if we go to RMBS, right, you could look at this with some criteria that I look at here with a red line and a blue line, right? The upper blue line above the red, check. Second blue line above the red, check. And it happens below the zero line here. So 1, 2, 3. So it's actually, as far as the technicals go, not a bad time to enter, but it doesn't look like particularly strong price action. But let's actually analyze the company, right? Let's see if it's something that we want to be holding long term. So in order to do that, we go to Yahoo Finance, right? yahoofinance.com. We type in RMBS, okay? Let me just do 2 of these companies for you. And what we do is we click on statistics, okay, on the left-hand side there. Okay, first thing, return on equity, we already know because we've scanned for that. That's over 20%, which is good. Quarterly revenue growth, 10%, 10.3%. Okay, not bad. Quarterly earnings growth, negative 78.7%. Not good at all. They've got a lot of cash, 432 million compared to their debt, so that's a good thing. Let's have a look at if the institutions like this, and they do. The amount of stock held by institutions, over 91%, very good. We can now click on financials. Have they been growing their earnings, right? Or their revenue, should I say. Let's have a look. Let me just bring back financials. There we go. Now, we can have a look from 2020, the next year, growing, slightly growing, and slightly growing again. So it is growing, not substantially, but it is growing, right? But more important than that is the free cash flow, right? This is something that gives us a good idea of how much money the business has in its coffers to spend. Right? It gives you a glimpse of the cash the business really has to draw on. Okay, so free cash flow is very important to look at. So if we have a look here, is it increasing? It's moving up nicely here, moving up, actually going backwards here, then slightly increasing. Okay, not too bad. And then finally, we can click on analysis. Now, there's a whole range of different ways we can analyze this, but I'm just showing you very quickly how we could do it to provide you some value here. Now, if we go down to growth estimates, what are they looking to grow as a per annum growth rate over the next 5 years? Just over 14%. Not too bad, right? Not too bad at all. Now, if we go back to our screener here and we go down to something like NVIDIA, okay? So if we go to NVIDIA and we have a look at NVIDIA, we can see recently it's broken above this resistance level here, right? See this purple line? It's broken above that resistance level. It's bounced off this support level, and the price action looks strong, right? I do like the look of that price action. Now, what we now want to do is go back to Yahoo Finance and analyze this particular company and see whether it's the type of company we want to own long-term or have a long-term option that we would like to buy, a long-term call option. So again, we click on statistics, okay, and we go down to return on equity. Now look at this, 123.77%. Something over 20% is a very well-managed company. It's producing a great return for its owners. So 123% is fantastic. Quarterly revenue growth, 122.4%. That's more like it. Quarterly earnings growth, not negative, but positive, 168.2%. Look at the total cash here, just over 34 or almost 35 billion compared to its total debt of only 10 billion. So it's got more than 3 times the amount of cash as what it does total debt. Why is that important? Because it shows you that it can pay for its debt, finance its debt, even in difficult financial times. It's got the cash available. It's also got cash available to expand, right, into new projects and certainly grow. So that's a good thing. Do institutions own it? Yes, 66.7% of institutions own it. Some of the smartest investors on planet Earth work for these institutions. They have billions of dollars of resources. So this is something we want to look at. And even insiders, people that work for the company, they own a chunk of it as well. So that's a good thing. Again, we go to financials and we look at the revenue growth from 2021 to 2022 to 2023 to 2024. My goodness me. And trailing 12 months, TTM, trailing 12 months. Look at this increase. This is incredible. Now, like I said, we want to be looking at free cash flow. We go down to free cash flow. Is that increasing? Yes. Went backwards there in 2023, then had a incredible, ridiculous increase in 2024, and the trailing 12 months is even better again. This is a phenomenal company, growing its revenues, growing its free cash flow, just incredible. If we click on analysis, we can have a look at what the next 5 years is likely to be growing at per year. And we can see here over 57%. So as artificial intelligence grows, this company is going to grow as well because they're producing the GPUs that are needed for artificial intelligence, right? So this is very, very impressive, right? So a growth rate per annum of over 57%, it's almost unheard of, right? That is incredible. However, we have to make sure that we're not paying too much for the forecasted earnings growth here. So what we do is we go back to statistics and we look here at the PEG ratio, price earnings growth ratio. If that's under 1.5 and ideally close to 1, if it's around 1 or certainly under 1.5, that shows you that you have GARP, G-A-R-P. What does that mean? Growth at a reasonable price. So we have a growth estimate per annum of over 57%. And the PEG ratio of just over 1 shows that you are not paying too much for that forecasted earnings growth. GARP, growth at a reasonable price. So you do have GARP, growth at a reasonable price, with a PEG ratio of only 1.05. So this is the type of company that you would love to own long term, right? So I love that, right? I really love that. And I hope you guys found that useful, right? Just going through and analyzing how this works. You know, if you'd like me to do more of this type of stuff, certainly let me know. Now, the other thing you'd have to look at is NVIDIA on the charts, right? The charts tell you, is it the right time? So the upper blue line above the red, check 1. The lower blue line above the red, check 2. And the lower blue line is crossed above the red below the 0 line. See the 0 line there running across here? So check, check, check. The 3 checks. This is the right, or it could be a good time to enter, okay? Now, we've already been in this for a while and made significant profits already, but would it be okay to get into this for a long-term trade, right? Now, when I say buying an option, I would be looking to take this out until 2026, okay? Long-term option. Once the stock has a significant move higher, I could sell out of the money calls and bring in more premium and pay off that long-term option. So that's definitely something that you could look at. So there's some ideas for you, right? Just so you can get an idea of some of the things that I would be looking at. Now, RMBS, we saw this, right? If we just go back to this, I'll just give you a little bit more value here. RMBS, let's have a look at this. We can see it had a huge fall, right? Going from around 65 all the way down to around 38. Right? That's a big fall. Could there be anything here that told us that this was likely to happen? Well, look at the red line, blue line. We look at it the opposite way now. Blue line below the red, that's a sign to get out. And the lower blue lines cross below the red. Whichever one of these happens first means you get out of a bullish position, right? So that gave us a warning sign. But also if you look at what the insiders were doing, right? OpenInsider.com. If you come here and go RMBS, let me know if you find this useful. If we have a look at this, look at all the selling that was done from the president, the CEO, a whole range of directors, chief financial officer. They were all selling. And this happened just prior to the large fall, right? So looking what the people that work for the company are doing, right? The CEO, the person in charge of the company, he was selling along with the chief financial officer, along with the president, along with a whole range of different directors. And then what do we see? A huge move down. People that work for the company know more about that company than anyone on planet Earth, right? Just trying to add some value there for you guys. So that's some of the ideas that you could look at as far as where to invest longer term after the US presidential election, or even before, because as we've seen, the US presidential election doesn't have that much of an impact longer term on your investments. However, the shorter term is important, right? Whoever is elected, the shorter term performance of your investments could be impacted. Now, if you found that useful, if you'd like me to do another video talking about the shorter term, if you'd like me to do a video showing you how we made so much money with MicroStrategy, how to set up a LEAP, a longer term call option, which will be a fraction of the cost of actually owning the stock. If you'd like me to do any of those things, if you found any use in this at all, please comment in the comment section now and let us know, right? I hope you guys found that useful. Thank you very much for listening. My name's Allison, and bye for now.